All right, what is up, everybody? So we're gonna go through the altcoin watch list for this week. I apologize for not doing one last week. I honestly just experienced some burnout, just dealing with too much and just couldn't get around to it. But regardless, most of the coins from last week were just coins from the week before, and the only thing that we did is we excluded near and we included curve and optimism. So we're going to go through the whole list again. We're going to start off with the first three, which will not be in this week's watch list. But regardless, they have continued to outperform. There's probably still worth watching. It's just that some other coins have kind of taken their spotlight, and my attention has diverted to those. So the first one is Soul. And the way that you would have looked to play Soul, at least that I would have, is by playing the hourly 200 moving averages, and in between that, the 30-minute 200 moving averages. So Soul has been on the watch list for a couple weeks now in a row, with the 30-minute 200s being the main thing to watch. So that would have been, Friday the 13th, and then obviously continuation. We lose the 30-minute 200s after chopping inside of a range. So really, you would say we broke down below the range. We test the hourly 200s, and then the reclaim of those 30-minute 200s allow for a continuation higher, right? Higher high on the daily. So that's exactly what you would look for. And ever since then, you kind of pull back. We've kind of started to disrespect the 30-minute 200s because, as I said, we'd formed this like range, and now this range has been exaggerated to a higher time frame now. So we're still testing the hourly 200s. We're still holding them. It might be worth watching in the event that we do break out of this resistance because we don't have any resistance above that, or at least not that I see until like $36 region. So yeah, might be worth watching, but not on this week's watch list. The other one would be Curve. Oh, let's get rid of this chart. A little bit weird, but something like hourly 200s is a decent high time frame portrayal. At the time, though, when we're talking about January 20th, somewhere over here, obviously we don't care about these hourly 200s because Curve doesn't care about the hourly 200s. So now you can start to attribute a sort of relevancy to the hourly 200s. But at the time, you most likely would have looked to play maybe the 30-minute 200s on a higher time frame, but probably more realistically something like the 15-minute 200s, as these give the most actionable analysis. This is probably the best way to scale your assumptions both towards the upside and to the downside for Curve, as of last week. And then that analysis continued to prove fruitful. So you would have looked to play the 15-minute 200, scale your assumptions off those. As long as we don't lose these 15-minute 200s, you really can't even argue why Curve is going to see a deeper pullback. That's not even a bearish argument, right? That's just a deeper pullback into a higher time frame trend, which might be something like your hourly 200, which we're now respecting. So again, a little bit choppy, not a great outperformer. Still, obviously headed to this top right corner, but not the best of the bunch, in my opinion. The other one would be Ave, which similarly is starting to move sideways in a lower time frame range. This didn't really perform incredibly well as of last week. So, and by that, I mean it only saw like a 10% push upwards, right? So that's the sort of standards that we're giving ourselves in this kind of market environment. A 10% push is deemed not that great, right? Which is pretty ridiculous to think about, a month ago, 2 months ago, we were scavenging for coins that would move 10%, but yeah, pretty much the same thing. Ave or Ave, however you want to pronounce it. 15-minute 200 is probably portraying the local, trend. And then once that breaks, you're allowed to look for something bigger. I don't think hourly 200s are even really what I would be watching. Truthfully, I don't know what I would be watching for Ave or Ave, which is kind of why we're taking it off of the watch list for this week, as we are more kind of just trading inside this like range, right? As of the past couple of weeks or so. So now we'll go ahead and get into the three coins that were on last week's watch list, which are still on this week's watch list as well. So if you're looking for the coins to play moving forward, then these coins are going to be what you want to pay attention to. So first we have something like Litecoin, which continues to outperform on a very high time frame. You see this uptrending structure, you see the outperformance. It's quite, obviously visible. And the way that you would portray that, probably something along the lines of these lower time frames. So 30-minute 200s do a really good job. Starting to go a little bit sideways on a smaller scale. All right, so maybe something like this. forming a little bit of a range, and then depending on which way this range breaks out, then you can attribute, more assumptions on a higher time frame basis. Maybe you get that pullback into something like 4 hour 200 moving averages, or maybe you just continue into this resistance level as the trend kind of implies, right? Higher highs, higher lows, uptrending structure. So the sideways is typically neutral price action. So you would think about it in terms of like it's 50-50 what's going to happen from here. But when you attribute a higher time frame context, you want to give a slight edge to the bulls. And by that, I mean it's probably more just like 51-49, right? You want to assume that the bulls probably have just a slight edge in terms of if you were to bet, gun to your head, which way this is going to break out, then you'd probably bet on upside just because of the higher time frame trend, right? In the event that it breaks down, then you're allowed to start looking for those deeper pullbacks into maybe something more significant, right? A much higher time frame, maybe like your 4 hour 200 moving averages, right? So look to play Litecoin as such. That's what I'll be looking to do. ADA is another good one. Oh, this was on last week's as well and continues to outperform pretty massively. The difference here for ADA is that really the 3 hour 200s is what we attributed relevancy to. ADA has been on the watch list, I believe, since here, right? And it's continued to head to this top right corner. The trend has continued trending. So, um, but the problem becomes that we don't really care about the 3 hour 200s, right? If your analysis is based off of these 3 hour 200s, then the only real action that you were able to take would have been down here. And the only way that you're still benefiting off of this trend is if you took some profit, left some running, took some profit, left some running, right? So that's the only way that you would have been able to trade that, which means that this is so strong. The momentum, the volatility, the context to the situation, volatility plus time frame, is that you're trending on a very, very high time frame, but you're doing that on a very extreme sort of fashion. So maybe something like hourly 200s, but truly, right? We care about all the sort of trends in between that, right? So that local trend is really what I'm looking for. And that would be something like the 30-minute 200 moving averages. So kind of the same context here, a little bit of a range that we formed on these lower time frames. And then, of course, same kind of gist. Once you break out of this range, you would just immediately assume continuation amongst all time frames, right? You want to attribute just a slight edge to this range, concluding, I guess, towards the upside. But obviously, if we lose the 30-minute 200s, if we lose these range lows, you are allowed to look for that deeper pullback. And truthfully, I'm not even quite sure if I would be trying to play the hourly 200s, especially not when they're kind of confluent with our area of interest already. So, if you lose the 30-minute 200s, you lose this range low, you're probably going to lose the hourly 200s as well, kind of thing. So really, you have to kind of look for what is still relevant, and then that's where you're able to kind of divert your attention back to the 3 hour 200s, and you can look for that kind of extreme sort of pullback, right? The other one would be optimism. So optimism currently in price discovery. Well, not currently, but as of recent in price discovery, we called this out in January 20th through a tweet because I was too lazy to make those videos. And ever since then, it continued trending. Right, higher highs, higher lows. It continues to break out of resistance levels. This was probably the all-time high resistance, meaning if we break this, we're probably going to create a new all-time high, and we did, and we continue to make new all-time highs, and the trend continues trending, and that trend is continuing along the hourly 200 moving averages. So the mindset here has now been exaggerated to a very high degree because the same trend that got us into price discovery in the first place is now the same trend that is seeing us trend into price discovery, right? When the term price discovery quite literally means exactly what it sounds like. You are discovering what is a fair price for optimism to trade at. So this might be the time where it's in my best interest to put out a video on my price discovery mentality, because truthfully, that's where most of the generational wealth that you're looking for when you come into crypto is going to be made in this price discovery. But it quite literally means we are looking for a fair price for optimism. And as long as we are still trending above these hourly 200s and still trending into further price discovery, you do not know what that fair value is any more than I do, any more than your favorite, crypto Twitter influencer, any more than the next guy. So if we come back 3 months from now or whatever, and optimism is trading at $10, and you couldn't fathom optimism doing that, why are you in crypto? Right? It's like you've failed to think logarithmically. You've capped your thinking, you put a handicap on it, and you said, oh, instead of thinking on a much, more grand scale, I'm just going to limit myself and say, oh, well, optimism is up 20% in the past couple days. And it just made a new all-time high, double top, bro, sweep of the highs, blah, 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 whatever. That's a very middle curve pleb, have fun staying poor mentality. As long as we maintain these hourly 200 moving averages, there are zero bearish arguments to this. The only bearish argument that you really have is that we might be forming a range, right? Which again is not inherently a bearish argument. It's a neutral argument, and it's just that neutral is obviously a little bit more bearish than just straight up vertical upside, right? So that's it. And other than that, you really don't have anything. If you do establish something, you will know. You lose the hourly 200 moving averages, you lose these range lows. Oh, look at that. The trend for optimism is probably done at that point. You can anticipate a push into the next support level. You can probably even anticipate a push into the next support level after that, right? The irony is that you tend to see people try and call, oh, that's a top. Oh, look at these wicks. That's a top. Oh, that's a sweep of the highs, bro. Oh, that's a double top. Oh, top, 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 top. And then once we get to here, they're like, oh, I'm going to buy the dip. Yeah, the problem is that you're not buying a dip anymore. You're now buying into a downtrend, and you couldn't tell the difference, right? You just have to be able to attribute a context to this kind of stuff. And by context, I mean, what is the volatility on what time frame? Right? So we're trending on high time frames along the hourly 200s. That should kind of tell you something, right? You can't really see much of a structure being built here, because all the structure that's being built is being built intraday along hourly 200 moving averages on the hourly time frame, right? So that is the context of that situation. So you have to adjust to that. So if that trend breaks, well, now your context is saying that optimism is very bearish on high time frames. You probably don't want to be buying dips, because they're not dips at that point. They are, in fact, downtrends, right? So optimism definitely has my interest. Looking to play those hourly 200s, looking to play the breakout of that range if we get it. And yeah, continuation and price discovery. And for that, I will be using Fibonacci extensions. So I really should make a video on that and go into full detail, but for another day. So the other coins that we have are Ape, which similarly is trending on a very high time frame on low time frames. So something like hourly 200 is doing a really good job of portraying the higher time frame trend. Obviously, this price action not too great, because you would label it, a deviation or a fluke or a fake out or whatever. Essentially, you would have been able to anticipate further downside, probably at least into this region, and obviously you didn't get that. But the good thing is you reclaim that exact same trend, and that should kind of tell you, oh, in hindsight, that was the low, right? That was the bottom to our high time frame trend. Here we are reclaiming that trend. So that means that we still have that snowman, right, towards this top right corner in terms of bullish arguments, just like we did for all of this price action. Run it back turbo, right? So trying to reclaim, and then you can attribute whatever definition that you want here. Oh, it was a bear trap. Oh, it was a fluke. It was a fake out. It was a deviation. It was this. It was that. It was, I don't care what you want to call it, number go up again, right? And then the number continued to go up. And ever since then, hourly 200s continue to be the higher time frame trend portrayal. The problem is you cannot even test the hourly 200s unless you lose the local trend of the 15-minute 200s. So be looking to play these 15-minute 200s actionably on this low time frame, and only be able to anticipate that higher time frame test of those hourly 200s, a deeper pullback, right? What might be a more comforting play for a lot of us in the event that those 15-minute 200s break. And then after those 15-minute 200s are reclaimed again, that's your indication that, yeah, you probably did buy the high time frame pullback, the dip, right, on the higher time frame. You probably did buy the higher low, because here we are showing strength back above those 15-minute 200s. Run it back turbo all over again, just like you would have kind of assumed here, and just like here, right? So that's Ape. Next we have Phantom. Trending very parabolically. Obviously, not going to be able to see anything on these very high time frames, but you want to pay attention to those low time frames and scale your assumptions from there, attributing a context. On this, I wouldn't even say that the hourly 200s are the thing to watch, because they haven't been relevant for this entire push upwards except for one sample, right? You have one sample to back up that thesis. So the problem for Phantom is that you really have to pay attention to these low time frames. And there's not really a clear indication of what the higher time frame trend is. It could be 30-minute 200s that you want to play, and then once those break, you just kind of stop paying attention to Phantom. That's probably how I would be looking to play this. Maybe 15-minute 200s are more actionable to you. I truly don't see which one is better or worse. I think there's just pros and cons to each. So there's times where, the 15-minute 200s shine, and there's times where they don't shine, right? So 30-minute 200s would have outperformed here. However, 15-minute 200s would have provided you an entry here, whereas 30-minute 200s would not have, right? So there's kind of like these pros and cons with each. 30-minute 200s gave a little bit better of an entry and an invalidation along this most recent pullback, right? So it's not really that deep. Whereas if you looked at the 15-minute 200s and you were paying more attention to those, you probably would have gotten stopped out on this move. So there's really just pros and cons. It's up to you guys how you want to play this, but I think I'm going to be using the 30-minute 200s, and then if that trend breaks, I'll just get out of the asset entirely. I just won't look to play it on a higher time frame, because how I would look to play it on a higher time frame than the 30-minute, being scaling my assumptions from the 30-minute chart, isn't really clear to me. So that doesn't mean that I'm not allowed to play it at all, but it does mean that I need to kind of be aware of that. And the last one is Vechain. So incredibly strong trend, right? So you have like probably, if you saw my tweet about RSI and how you're probably better off turning off the indicator entirely, you probably have like a bear div here, and then it leads to like this pullback, which ends up being meaningless in hindsight. And you have like another bear div, and you get this pullback. You probably have a triple bear div here. It doesn't matter. You don't really want to be playing those bear divs. You want to be long biased when the chart is going up, when little Timmy, the 4-year-old, can tell you, hey, that chart is going up, right? It's heading to the top right corner. When that's the case, you want to be playing that trend. When the trend flips, something like 4-hour 200s, right? And the massive relevancy that has been attributed to them. So here, right? And that's your trend prior. And let's say here, and that's your trend prior, right? Or here, and that's the trend prior. When that's the context of the situation, you want to flip into a more macro sort of bullish bias. And that's exactly what we did live, right? So doing that and continuing that, you want to establish what is the higher time frame trend portrayal. It's not the 2-hour 200s, and it is the hourly 200s. So this is really where the bullish arguments start. This is the snowball to the snowman that comes into play somewhere around here, right? And from there, your high time frame trend, or your snowball, continues to do exactly what you expected it to do, and exactly what got you here in the first place, into a bullish bias, right? It's the same thing. It's the same argument. So unless that argument breaks, you don't really have a true bearish argument. You're allowed to tell me, oh, here's a triple bear div. We might pull back into your hourly 200s, but that only actually will ever happen once you break down below the even more local trend, right? So in between the hourly 200s, you want to be watching the 15-minute 200s. So you have 4-hour 200s, which are extremely relevant on very, very, very high time frames, but obviously they haven't been relevant during this entire push upwards. They got flipped, and then we tested them once, and then we maybe tested them again like the next day or two, and then we haven't tested them since. VeChain has not cared about your 4 hour 200 moving averages, right? You had hourly 200s, which were the same bullish argument that got you into reclaiming your 4 hour 200s in the first place. And VeChain has continued to respect those as a high time frame trend, right? In between that, there are times when we sort of stray away incredibly far from wherever those hourly 200s are residing, right? So somewhere like here, you're really far away from that trend. It's really probably more like this, right? You're really far away from that trend, and you're, thinking, oh, we're going to see this deep pullback, but you're not going to expect that deep pullback until you see price action like this, which is a clear sort of breakdown below this local trend, right? It's the same kind of way of thinking, the same thought process, building a snowman. If you ever wanted to build a snowman, you have to start with a very very large snowball. If you wanted to build a very very large snowball, you have to start with a large snowball. If you wanted to build a large snowball, you have to start with a snowball. So breaking that down leads you into a bullish bias, and using that exact same thought process, you can reverse engineer it and say, well, how am I going to be able to anticipate my 4 hour 200s to get retested when they're all the way down here, when in order to do that, we have to break my hourly 200s. But wait, when we're trading here and I'm looking for us to break my hourly 200s, I can't even expect that unless we break the 15-minute 200s, right? So it's just this kind of like, way of thinking that helps me break down price action. You test your hourly 200s, the high time frame trend holds, you flip the 15-minute 200s again, you break out of them, and you would automatically assume, you know what? That was the high time frame trend retest. We're probably not going for the 4 hour 200s. If you're still expecting us to go to the 4 hour 200s, you're wrong, right? You're probably incredibly wrong. And there's a really good chance that we're just going to continue the trend from here. And lo and behold, that's exactly what we do. And the same arguments. Oh, look at that bear div. Look at the double top. Oh, did you see that? Wick. Oh, did you see this, that? And the bear div, and that bear div is starts here and it goes on for another couple of percentages or so, and then finally that trend breaks. Whereas other people would be arguing, oh, time to look for the 4 hour 200s. You would just simply assume hourly 200s, take it level to level, and then only after those hourly 200s break would you look for a much deeper pullback. They never broke. Instead, you reclaim the same strength, right, that showed in the form of weakness when you broke down and lost them here, the same thing that allowed you to anticipate a retest of your hourly 200s. You test those, you reclaim that exact same indication, right? And you just assume continuation of the overall grand scheme trend, which even a 4-year-old could tell you what is happening for VeChain. So hopefully, and that's the exact thought process for all of these coins. It's just that VeChain does a really good, clear, and concise job of portraying and helping me portray those ideas and get them across to you guys, so you can hopefully adopt that sort of mindset. But yeah, that should be the gist for all of these coins, not just VeChain. And that'll be exactly how I'm looking to play into these coins. So I hope you guys enjoy this stuff. I really do put a lot of effort into these videos. I know it doesn't seem like so because I don't do any editing or, crazy graphics or, sound effects or anything like that. But I do put in a good amount of work to this stuff. So I hope you guys appreciate it. I hope you're finding value in it. I enjoy doing this stuff. So if you do find value and you want to support me to a greater extent, the best way to do that is to sign up through my Bybit referral link and trade on that account. So that does help me. I do make a commission on that. Your boy did become a YouTube influencer. So if you're seeing ads on this video, I truly don't know how that works. But if you're seeing ads on these videos from now on and you haven't recently, that means I have gone totally, YouTube influencer cringe, which means that you absolutely have to smash that like button, comment, subscribe, share this with your grandmother, donate to me so I can afford avocado toast because I'm a pleb, and yeah, all that kind of stuff. So thank you guys as always. I do appreciate your support. I hope you enjoy these videos, and much love, and take it easy.